Hey everyone, welcome back to Corporate Decoder, the place where we try and make sense of what big companies are trying to hide in their financial reports. I have a particularly dense one for you today from the Weitz Funds, their latest quarterly filing. This is a semi-annual shareholder report, and it is packed with details on their various funds, their performance, their costs, and what exactly they invested in. It is a lot to digest, so let's dive in and see if these funds are really growing our money or just growing their own. If you appreciate getting straight insights from corporate documents, make sure you are subscribed and join our Discord community linked in the description below for even more analysis. Alright, so this is a report from Weitz Funds and it covers the period up to the 30th of September 2025. What is really interesting here is they give us performance data for several different funds. We've got the Conservative Allocation Fund, the Core Plus Income Fund, the Large Cap Equity Fund, the Multi-Cap Equity Fund, the Nebraska Tax-Free Income Fund, the Partners, the Third Opportunity Fund, the Short Duration Income Fund, and the Ultra Short Government Fund. It is quite a portfolio. Let's start with a major section here, the performance for the period. The Weitz Conservative Allocation Fund Institutional Class, for example, returned 2.84% for the 6-month period. That is not too bad. They mentioned that both fixed income and equity holdings contributed positively. Top equity contributors included Oracle, Microsoft, Vulcan Materials, Alphabet, and Martin Marietta Materials Inc. They say this was supported by robust operating results and strength among AI infrastructure beneficiaries. That AI buzzword is still very much alive. Now let's look at what they actually hold for the Conservative Allocation Fund Institutional Class. The top equity holding is Berkshire Hathaway Inc., making up 2.7% of the net assets. Then comes Aon plc at 2.6% and Vulcan Materials Company at 2.4%. It is a pretty concentrated list with the top 10 holdings representing 22.5% of the net assets. This means they really believe in these few companies. Interestingly, for credit quality in this fund, 73.8% is in US Treasury. That is a huge chunk indicating a very conservative bent. Then you have 7.4% in US government agency mortgage-related securities and only 15.6% in AAA rated bonds and a tiny bit in actual corporate bonds. This shows a strong focus on safety and government-backed debt. Looking at the average annual total returns for the Conservative Allocation Fund Institutional Class, its 6-month return was 2.84%, its 1-year return was 1.04%, its 5-year return was 5.32%, and its 10-year return was 6.32%. That 10-year return is decent, especially considering the conservative nature of the fund. Compare that to the Bloomberg US Aggregate Bond Index, which had a 1.84% 10-year return. So the fund is outperforming that benchmark over the long haul, though it lags behind the Morningstar Moderately Conservative Target Risk Index, which shows it did much better. Now let's talk about costs for a hypothetical $10,000 investment in the Weitz Conservative Allocation. Fund Institutional Class, the costs for the last 6 months were just $36. That is 0.70% of the investment. That is pretty low and shows they are trying to keep fees down for investors. Let's shift gears to the Weitz Core Plus Income Fund Institutional Class. This fund returned 3.34% for the 6-month period. They mention agency mortgage-backed securities, MBS, corporate bonds, collateralized loan obligations, closed US Treasuries and asset-backed securities, ABS, as top contributors. MBS benefited from coupon income and lower interest rates according to the report. Corporate bonds led by high yield gained as credit spreads tightened during the quarter. That means the riskier corporate bonds actually did well, showing a good appetite for risk in that part of the portfolio. Looking at the maturity distribution for this fund, it is quite interesting. A large portion, 34.6%, is in bonds maturing in 10 years or more. This means they are investing for the long term and are likely comfortable with lower interest rate environments to lock in current yields. Their 31.8% in US government agency mortgage-related securities also shows a significant holding in mortgage-backed assets. And for credit quality, quite a bit, a whole 15.3% is rated BBB, meaning it is at the lower end of investment grade. They also have 3.8% in BB and 3% in B-rated bonds, signifying a decent portion of lower quality or junk bonds. This is clearly a fund that is taking on more credit risk to achieve higher income. Moving on to the Weitz Large Cap Equity Fund Institutional Class. This fund returned 3.14% for the 6-month period. Top contributors included AI infrastructure beneficiaries like Oracle Corp, Alphabet Inc., Microsoft Corp, Meta Platforms Inc., and healthcare company IDEXX Laboratories Inc. Those are some big tech and health names. The report mentions primary detractors were Gartner Inc., CarMax Inc., Global Payments Inc., Accenture plc, and Charter Communications Inc. Those e-service providers like Accenture and Gartner were restrained as investors reassess their roles in an AI-driven environment. AI is definitely impacting company valuations differently. For the large cap equity fund, the holdings are really concentrated. Danaher Corp is the top holding at 6.8%, then Microsoft Corp at 6.7% and Thermo Fisher Scientific Inc. at 5.2%. The top 10 holdings represent 51.6% of the net assets. This suggests a high conviction strategy, focusing on a few key companies they believe will drive growth. The sector breakdown shows a heavy weight in information technology at 22.5% and financials at 20.9%. Healthcare is also significant at 17.2%. This confirms a focus on growth sectors. Now, for the large cap equity fund institutional class, its 6-month return was 3.14%, but its 1-year return was a negative 1.29%. Ouch, however, over 5 years it is 9.48%, and over 10 years it is a very strong 10.10%. This pattern of lagging in the short term but doing well long term is classic for value investing, and might explain why they mention the value style being out of favor. It is outperforming its benchmark for the 10-year period though. We have the Weitz Multi-Cap Equity Fund Institutional Class. This fund returned 3.93% for the 6-month period. Top contributors included AI infrastructure beneficiaries Alphabet Inc. and Meta Platforms Inc. Along with Perimeter Solutions, Heico Corporation and Vulcan Materials Company. Detractors were CarMax Inc., LKQ Corporation, Liberty Broadband Corp., Gartner Inc., and Aon plc. Again, CarMax, LKQ, and Liberty Broadband were held back by disappointing earnings, and Gartner declined as investors reassessed its role in an AI-driven environment. The top holdings here are very similar to the large cap fund with Berkshire Hathaway Inc., leading at 7.9%, following that are Heico Corp at 7.1% and Alphabet Inc. at 6.3%. The top 10 represent 50.7% of net assets, indicating a focused approach across different market capitalizations. The sector breakdown is also quite similar, with financials leading at 21.2%, followed by communication services at 18.6% and industrials at 13.4%. This diversified equity approach seems to target sectors with strong underlying business principles. Let's look at the Weitz Partners, the third opportunity fund institutional class. This one returned 2.95% for the 6-month period. Top contributors included AI beneficiaries Alphabet Inc., Microsoft Corp., and Meta Platforms Inc., and some other interesting companies like Perimeter Solutions, SA, and CoreCard Corp. Detractors were CarMax Inc., Liberty Broadband Corp., Berkshire Hathaway Inc., Global Payments Inc., and Roper Technologies Inc. They mention again that Berkshire, a steadier holding, gave back some prior gains as investors favored higher octane names. This suggests an opportunity within the value investment style, even in a growth-focused market. Berkshire Hathaway Inc. is the largest holding here at a significant 13.6%. Thermo Fisher Scientific Inc. follows at 6.1% and Alphabet Inc. at 5.8%. The top 10 holdings make up 59.5% of net assets, showing a very high conviction strategy. The sector breakdown shows financials at 31.5%, information technology at 18.6%, and healthcare at 17.5%. Those are consistent themes across the equity funds. Now for the income funds, starting with the Weitz Short Duration Income Fund institutional class. This fund returned 2.76% for the 6-month period. They attribute performance to non-agency CMOs, asset-backed securities, US Treasuries, collateralized loan obligations, and corporate bonds. Portfolio performance benefited from coupon income and the earlier decline in US Treasury yields. They also note credit quality remains stable to strong. The maturity distribution for this short duration fund shows 38.8% in the 1 to 3 year range and 22.1% in the less than 1 year segment. This shorter maturity profile is designed to reduce interest rate sensitivity and provide stable income. Credit quality here is quite good. 45% is AAA rated and 73.8% is in US Treasuries and AAA rated securities combined. Even the BBB rated bonds are only 6.3%. This confirms a focus on high quality credit and safety. Finally, let's look at the Weitz Ultra Short Government Fund. It returned 1.98% for the 6-month period. They say the fund held 99.6% in US Treasury and the rest in cash equivalents. The fund maintained a low average effective duration to reduce rate sensitivity, focusing on short term treasuries that provided steady income through favorable reinvestment rates. This fund is all about safety and liquidity. Very low risk, very low return. Looking at the summary for the Weitz Conservative Allocation Fund, the net assets are $229,608,404. The number of portfolio holdings is 195. That is a good number of holdings for a conservative fund, showing diversification. Portfolio turnover rate is just 9%. That means they are not actively trading and are likely holding investments for the long term. For the Weitz Core Plus Income Fund, regardless of class, the net assets are a massive $3,713,426,169. That is over $3.7 billion. They hold 566 investments and have a portfolio turnover rate of only 6%. This implies a buy and hold strategy for a very large amount of money. The Weitz Large Cap Equity Fund, both classes together, has net assets of $820,555,944. They hold just 29 portfolio positions and have a very low portfolio turnover rate of 4%. This is a highly concentrated portfolio with very few positions and very infrequent trading, suggesting a deep conviction in those names. The Weitz Multi-Cap Equity Fund, also consolidated, has net assets of $574,982,510. They hold 42 positions with a portfolio turnover rate of 6%. Now, for the financial statements, a lot of the funds have a heavy allocation to US Treasury assets. For example, in the Core Plus Income Fund, US Treasuries make up 27.3% of the portfolio. That is a significant anchor of safety in that fund. Looking at the shareholder reports, the Weitz Conservative Allocation Fund, for example, lists common stocks at 42.8%. This is broken down into financials, information technology, healthcare, industrials, materials, communication services, and consumer staples. The top equity holding listed is Berkshire Hathaway Inc. at 2.7% of net assets. The report gives us fund statistics. For the Weitz Conservative Allocation Fund, investor class net assets are $229,608,404. The number of portfolio holdings is 195. This is the same number as the institutional class, suggesting they are managed identically. Net investment advisory fees paid are $617,714. The portfolio turnover rate is 9%. Under the section, What did the fund invest in?, we see the top 10 equity holdings. For the Conservative Allocation Fund, these are Berkshire Hathaway Inc., Ion plc, Vulcan Materials Company, Thermo Fisher Scientific Inc., Martin Marietta Materials Inc., Danaher Corp., MasterCard Inc., Microsoft Corp., Visa Inc., and Analog Devices Inc. The total for the top 10 is 22.5% of net assets. This is a very concentrated portfolio and shows a belief in these specific companies. Now, this filing also includes information about the Board of Trustees. We have Lorraine, Chang, Stephen, M. Hill, Allison L. Malloy, Elizabeth L. Sylvester, Dana E. Washington, Andrew S., Weitz Wallace R., Weitz and Justin B. Wender. It is interesting that Wallace R. Weitz and Andrew S. Weitz are on the board. Wallace Weitz, being the founder and a legendary investor, makes his presence there significant. Andrew S. Weitz is also listed as President and Principal Executive Officer. This is a really important section. The Board of Trustees had to approve the continuation of the agreements with Weitz Inc., the advisor. They reviewed a lot of factors, including investment performance fees, expenses, economies of scale, and benefits to the advisor. For the Large Cap Equity Fund, they noted that the net expenses for institutional class shares were above industry averages. For the Multi-Cap Equity Fund, the net expenses were also above industry averages. Looking at performance, they noted the Conservative Allocation Fund's institutional class shares had underperformed its peer group median for several periods, but outperformed the Bloomberg US Aggregate Bond Index over the long term, which is a good sign for a conservative fund. The Core Plus Income Fund, however, had outperformed its index and its peer group median across multiple time periods. The equity funds Large Cap, Multi-Cap, and Partners, the 30, all had periods of underperformance relative to their indices and peer groups. The advisor's explanation is that their value-style investing has been out of favor, and they prioritize long-term results. This is a common theme in value investing that plays out over cycles. When it comes to costs, they compared fees to peer funds. For the Large Cap Equity Fund institutional class, the net expenses were above average. For the Multi-Cap Equity Fund institutional class, the net expenses were also above average. For Core Plus Income, the fees were below average. Short Duration Income's institutional class fees were above average, and ultra-short government's fees were below average. This shows different strategies for different funds. Some are more expensive than others, which is typical. They also noted that Weitz Inc. pays for all distribution and marketing expenses from its own resources, which is a positive for the funds. So what is the story here? Weitz Funds manages a variety of funds with different risk and return profiles. Their equity funds seem to be sticking to a value investing philosophy even when it is out of favor, which can lead to lagging short-term results, but potentially strong long-term gains. Their fixed income funds mostly focus on safety and have conservative allocations with strong credit quality. The financials show significant assets under management, particularly in the Core Plus Income Fund. The fees are generally competitive, though some expense ratios for certain equity funds are on the higher side even after waivers. The board's thorough review of the advisory agreements suggests a commitment to good governance and shareholder interests. The fact that Weitz Inc. bears distribution and marketing costs is a good sign. A key risk to watch is the underperformance of the equity funds against their benchmarks and peers in the short to medium term. Investors need to have patience if they believe in the value strategy long term. The concentration in some equity portfolios also means individual stock performance can significantly impact returns. However, the diversification across multiple funds does offer a degree of risk management. Overall, Weitz Funds seems to be operating with a clear investment philosophy and a commitment to their shareholders, though some funds face competitive pressures and performance challenges in the current market environment. Alright, that is our breakdown of the Weitz Fund's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.